I go to Chapman University, which is in Orange County in California, um, studying business, and I I got into crypto back in like January of 2020. So my first cycle. I yeah the stock for 2017, and I kind of over quarantine just kind of got like so yeah, it was kind of loud. But yeah, so pretty much I got into crypto in January 2020, and I've been into like kind of stocks since like 2017. And kind of over like quarantine with Corona, I just kind of fell down the rabbit hole. I've gotten like really into it, and kind of working on trying to like break into like the industry, get like a job after college. Yeah.
Nice. So I study at Rutgers University in New Jersey. I'm the head of tech of our blockchain club there. The club started in, I think, 2018, 2019, around there. Our president, he rode the wave of the 2017 bull market, and he started something called Rutgers Bit. It didn't end up working out, so he carried it over into the Rutgers blockchain hub. And we work with companies like Deloitte, Xtrapy, who does teaching about Solidity. We work with Ben, obviously, and we're really interested in starting our own crypto fund, hopefully. So I wanted this opportunity as kind of like experience for when we start that fund, as well as we're starting to carry over into a Uniswap delegate. If you guys know about that, where people can vote on the protocol of Uniswap, and we're trying to get experience about that as well. Hopefully, with the stuff that we do with Ben, we'll have good knowledge about the space to carry over into both the crypto fund, the student managed crypto fund, and the Uniswap delegate. So, Eric, did you want to say anything?
I think you're muted, yeah.
That always happens. Welcome, guys. Really excited. This is, the first kind of time we're doing something like this, meeting for this new crypto fund that we're starting up. And as Sam said, like, this is really training wheels for the clubs that want to do these initiatives at their own schools. So like starting a crypto fund or being a Uniswap delegate, getting involved in running nodes and mining and doing different projects for different groups. I think some of the issues, there's two main issues that we're trying to solve through these intercollegiate initiatives. One is the regulatory pressure. So I know a lot of clubs, including my own club, because I went to the MIT Bitcoin Club, I was president there. We had these ideas for running our own crypto fund, managing our own, and doing these reports and everything, because that's good training to go and join a crypto fund after graduation. But the schools won't let it happen. They don't like it, and they don't allow it. So being able to do it intercollegiately under a nonprofit umbrella like Ben, I think is a very good idea. And then the other one is just responsibility wise, like it's a lot of effort to run a delegate. There's a lot of responsibilities with that. So for clubs that aren't aware or don't know how to do it, you can do it through Ben first. And if the Ben Uniswap committee, for example, Harvard and Berkeley are both a part of it, and they run their own delegates already that are really, really great. So you can learn, and any new club that joins can learn from Harvard and Berkeley how they run their delegates to then replicate that process at their own university. So it's all about the clubs learning from each other. So I'm really excited for both of those things, but I'll pass it back to you guys now.
Just a quick question on that. With setting up nodes, do you guys have like information on, I was looking at trying to set up a Chainlink node, but I know it's a lot of work.
Yeah.
I don't know if you guys have had any past experience with that, but
officially as an entity, no. I mean, personally, I have some experience, so I can like send you some links for that. But as an entity, that's something like we're putting all these resources, we're compiling them together into our wiki. So it might or might not be there already at wiki.blockchain.edu.org.
Okay, perfect.
Yeah, to speak on the regulatory pressures that Eric was talking about, we actually have been working with a professor who used to work at NYU, Maravo Zaire. She works at Rutgers now, and her suggestion when it came to the crypto fund was going on one of those sites that allows you to trade assets with like fake money, and we all agree that it's not the same as the pressure of using OPM, other people's money, because there's a lot of responsibility that comes with using OPM. You don't take as much risk. You try to be more risk averse because you don't want to lose your investors' money. So definitely having this fund is a good experience for the responsibility of managing assets.
Yeah, this is Ben's real money, right? This is $5,000. And so one, it's a way to self-fund Ben if it works out, but also, I mean, you're right that there's just so much more responsibility, and you take it a lot more seriously when it's like real money, and you learn a lot more. And then we're trying to replicate like the real world experience that, you know, you guys, and then also any other future student analysts that join, we're trying to grow and expand the program to get more analysts. So you guys can tell your friends that you have at other universities as well. We'd like a lot of university representation, but having the ability to manage real funds while you're a student and it's under a nonprofit umbrella. So there's like a safety net, but also, yeah, it's like you get to be a little risky, and you get to like have real world consequences to your experiment. So there's like a level of responsibility, but there's also still the safety nets that like we're not pressuring this thing to be successful. Like Ben is going to be fine if the money, like if we lose, if we go 5,000 to $0, we get rug pulled, we lose everything. Like, yeah, it'll suck a little bit, but it's going to be fine, right? There's a safety net there. So it's really about it's more about like the learning and the experience and the reports and the getting the credit, right, and the credentials that you can then go and apply to like Masari or apply to like any big hedge fund and show them these reports that were used and influence the decision making for real funds.
Exactly. No, sounds great.
So I think it was Ben, you had to dip off at around 1:45, or was it Lucas? Got to.
No, I'm fine. I think it was Ben.
Okay, yeah. So let's get into the allocation. We can talk more about the kind of management stuff later. So let me just pull up the applications that you guys proposed. So something I noticed was none of you had included Bitcoin into your portfolios, your proposed portfolios. What was the reasoning behind, I think one of you took like almost 100% DeFi approach, and one of you had 50% ETH. What was the reasoning behind that for you guys?
At least for me, my methodology, I wanted to be more DeFi focused, but for a lot of my like investment thesis in some of these technologies and projects, I wanted to invest more into like the use cases, especially in smart contracts. So that was my kind of main methodology for investing there. And I mean, Bitcoin can go up a lot, but I think that there's a lot of projects that are not open to the public, or like the public is not fully knowledgeable on, like every person. But I find just Bitcoin's gotten so much media and attention. You have just all these gurus promoting on Instagram and everything. Yeah, there's a lot of money going into it, but I think that for someone to actually do a lot of deep understanding into crypto and everything, it takes a lot of time and effort, and the normal person wouldn't do that. So I think there's a lot of undervalued companies or projects in this space, and that's why I've mainly invested into them.
Yeah, I guess for me it was kind of similar. Like I kind of wanted like exposure to like the different use cases like NFTs and kind of like the metaverse and DeFi. But also I know with Bitcoin in particular, at least like kind of for what's available to like on token sets, there isn't like kind of a trustless form of Bitcoin kind of on Ethereum, and like that's an ERC20 that I felt like I could put into the fund, because I feel like if it's not like with wrapped Bitcoin, that's obviously like a custodial. I forget who the custodian is, but I know like it's not trustless, and I think that kind of like adds more risk to like something happens with whoever the custodian is, like that could obviously like hurt the fund and like take like a sizable percentage of it to like zero right away potentially.
Yeah, I mean, I view wrapped Bitcoin as a pretty safe investment. Just kind of the ERC20 form of Bitcoin. But I kind of get what you mean that it's not trustless and it is somewhat centralized. But
Yeah, that is interesting that you bring that up, Ben, because that is also the approach that the DeFi Pulse Index takes. And the DeFi Pulse Index, one of the requirements for tokens is that it can't be a wrapped form; it has to be native on Ethereum. So yeah, that's an interesting point. That's why they don't. Well, I guess they also don't have Bitcoin just because it's not like DeFi and they're focused on DeFi. But for example, wrap tokens from other blockchains for DeFi projects, which there's more of that happening now. That there's more like interoperability, cross-chain interoperability, but they still have that stance. Like there's a certain extra level of risk with custodianship that they don't want to expose their index to, at least not for like that particular basket.
Yeah, that was kind of my I didn't know DPI had that approach, but that was kind of my like, yeah, pretty much what I was thinking as well.
so I think we can all agree that we should have some Ethereum in our basket. So what percentage allocation do you guys think it should be? I think we all had Ethereum in ours.
Yeah, I didn't, but I think having some is a good idea. So
I think it kind of depends on like kind of what's kind of like our overarching like strategy for kind of the composition of the fund. I think.
And what's kind of our risk tolerance too? I mean, like Ethereum and Bitcoin probably are safer bets right now, but there's a lot of opportunity in other projects as well to rapidly expand. So, or they could go down as well.
You guys discuss for a bit. I'm gonna go grab a sheet of paper to write down all of our proposed allocations, try to do some math about how we can include all the tokens, maybe things like I had some stuff that wasn't available on token sets, so we can obviously take that out. But other than that, hopefully we can have all our coins and then we can debate a little about what should we include and what we shouldn't.
Sounds great. Yeah, perfect.
Yeah, as for the risk tolerance, I mean, you guys are free to vote on it, like collectively decide, like it can be super risky or it can be like conservative. You know, I think with this amount, it's small relative to Ben's total fund. So we're okay with if you guys go extremely risky or if you go extremely conservative. It's more about what you think would perform better in this market, right? At this current stage of the market, like, are we close to the end of the bull market? Is there enough like institutional interest that it's going to keep growing from where it is today? So the decision between conservative or risk should be decided based off of like how you feel it would perform in this market, not the risk total to like what Ben's total funds are and how much like do we have to be really safe or really risky with this $5,000? That part doesn't really matter in this context.
Perfect. I think we should clarify maybe which areas we want to get into. Like I know there's storage, this is the whole gaming area, NFT market, DeFi. Maybe if we want to be diverse or if we want to specify in certain areas and be looking out for new projects in those areas, maybe being more specific could be better. So I think we should decide that as well.
Right. And well, there is a constraint that Sam brought up, is that for this initial allocation, since we're deploying the fund on token sets, it's tokens that are available on token sets. So whatever allocations you guys pick, make sure that like it's available there. And then for future allocations, we can figure out how to spin it out so we can keep like a separate basket somewhere else. But keeping it all within token sets would be the easiest right now.
Definitely.
So is the fund going to be like kind of like a public fund, like is going to be like kind of like anyone from the outside can invest in it as well, or is it going to kind of be like private, like with kind of on token sets?
So yeah, this is actually something interesting that people should you guys should take a look into, and also Jeremy should take a look into that. Yeah, I think definitely most of the funds that are on token sets, if not all of them, are public. Anyone can buy into it. That's a really cool thing about token sets, is that like you can go and see like your favorite social traders or your favorite bots. You can go buy a portion of the fund. And then you make the returns or make the losses with that fund. And then the fund gets like a performance fee, a carry fee. These are all parameters that can be set. For us, like say we wanted to keep it private, I don't know if TokenSets has that ability to switch it off to private. So it might actually just be public by default. But I think that that's something, yeah, I think that's something we could just leave it like that and kind of decide later on. But yeah, in its current state, it's definitely transparent. Anyone can see it. Anyone can see the changes that have been made over time. And TokenSets actually has a thing that anytime there's like a feed section. So anytime that any allocations are changed, the social trader has the opportunity to, or the ability to post an update and say like, this is why we made these changes at this time. So you should definitely take a look at the DPI index and then see how they do it. Does TokenSets have a ticket size? What does that mean?
Like, do you have to invest a certain amount into the fund to be a part of it?
No, I think you might be able to like set that as a requirement or parameter, but at least the ones that I've seen, you can invest as little as like $1. Like the only issue there is that like gas fees to get in and out of the fund might eat away your earnings if you're not investing with that much.
As far as fees, what did you guys put for the fee section in your methodology?
I believe I put, it was like 2.5%, but I'm pretty open to suggestions.
2.5%. Sorry, 2.5% as a streaming fee or a buying fee? Or...
I initially said the buying fee for 2.5% and the performance fee for 5%, but I'm open to changing that though. That was just something rough I put.
Yeah, sorry for cutting you off, Ben. Continue, please.
No, it's good. I put, I think, 0.95%, but I saw that's what like DPI had, and I didn't have a performance or a buying fee just because like my strategy was like an index type strategy. It wasn't like a super like active strategy. So yeah.
Yeah, I just want to.
Oh yeah, go ahead.
You go ahead. Sorry, Sam.
I had a performance fee of 20% and a streaming fee of 2%. Where I got those numbers from is PricewaterhouseCoopers. They sent out a report on crypto hedge funds, and I took those numbers exactly from the median of, well, they called it a management fee on TokenSets. The streaming fee is the closest to somewhat of a management fee. And the 20% performance fee was the median for crypto hedge funds in 2020. Yeah, go ahead, Lucas.
Yeah, I just want to ask, like, how actively managed do we want this to be? And I just want to get a better understanding of people's maybe technical analysis as well, or if that's something that maybe we're not all super knowledgeable on, and we want to maybe improve that skill as we go on throughout this term.
Yeah, I do a lot of TA for my personal portfolio. I've been doing it since around 2019, so I think I have pretty good knowledge as it pertains to technical analysis. I wasn't sure if Jeremy and the rest of Ben wanted us to use technical analysis because, some people think it is somewhat of a pseudoscience, especially when it comes to efficient markets hypothesis. But as it pertains to cryptocurrency, I think technical analysis is the most powerful tool in determining the direction of the market, just because we don't have fundamental indicators. But I'll share my methodology with you. There's a lot of technical analysis into it. So I guess you can see some of my style. I usually like to trade triangles a lot. I use RSI quite a bit to find the short-term tops in the market. But other than that, in a bull market, I've shorted Bitcoin and Ethereum multiple times this year. I think I've lost money on every single short. So my strategy was a discretionary long short fund, but shorting in a crypto bull market is pretty dangerous. especially if the short has unlimited losses. Personally, I use Bybit as an exchange to short crypto, and they have a liquidation price, so there isn't unlimited losses. But obviously, if we're using token sets, we'd have to do somewhat of a nominal short by, if a token is underperforming or there's a short-term top, just take it out of our fund. I think they do have a couple of like short and long coins. Like I think I saw something like a 3 times leverage Bitcoin coin on there. I'm not entirely sure how that works, but my strategy was a discretionary long short.
Yeah, I believe that for shorting and for leverage, there are tokens. There are projects, and what happens is that you kind of can mint these synthetic tokens. So just the same way, and this is really cool because this is gonna change the game for like everything, right? It's like these synthetic assets that are pegged to the value of the derivatives. So for example, like there are tokens that are pegged to the value of stocks. So Mirror Protocol does this really well. There's cryptocurrencies called like M Tesla, M Apple, M Google, and they're pegged to the value of those stocks. They just announced a new one called M Coin, and so that one's the Coinbase. So the Coinbase IPO, once that goes live, that's going to be a token that people could like buy into and buy and sell. There's also gold and oil. So like even in the Ben fund, like if you guys wanted to have Coinbase or like oil or gold, like you could have that as well. And so the other kind of synthetic asset as well is the inverse asset. So those inverse assets are pegged to the inverse value. So if you buy that token and that stock price or that like asset price goes down, then the price of your token goes up. So that is effectively doing a short. So I think, and then you could leverage on top of that. So you can buy a token that's like a 3x short or like a 2x short or even like a 3x long. So lots of flexibility. This is like the concept of the money Legos because everything stacks on top of each other. And so you might want to double check like, yeah, exactly. Like you want to check if that's available on token sets because I don't know. I imagine when you were talking about like how some of the sets integrate those strategies, I imagine that those are what they use, that they use those synthetic assets. But yeah, you should double check on that to see if like it does that so we can incorporate that into this strategy.
So Lucas, you were talking about like how often we're going to manage the fund and maybe how often we're going to conduct a rebalancing. I think Jeremy's goal was to have this mostly be a passively managed fund. Obviously, kind of like by the way I'm talking, I prefer more of like an active hands-on management. But as far as time management and such, maybe passively would be the better option, especially since I assume all of you guys are pretty knowledgeable traders by the fact that you're analysts now. But in the grand scheme of things, we're kind of like beginners. So I think passively might be the better route. And I think we were supposed to be meeting around 2 times a month on the 1st of the month and the 15th, something like that, to deliver our reports and also talk about rebalancing. So as far as the management type, I think that answers your question.
Yeah, more like an index fund kind of, right?
Yeah, I believe so. I mean, we can take any strategy that we really want. I was really hoping to include wrapped Bitcoin into our basket, but it seems that we may not be doing that. Maybe we can allocate something like 5%, 10%, but I think Bitcoin is a good hedge to more risky assets that we want to invest in, just because it has so much market liquidity. Those big 20% in a day candles aren't the norm for Bitcoin anymore, just because there's so much market liquidity that, like 5%, 10% a move isn't unprecedented, but I think Bitcoin is less likely to see, like a volatile move to the downside in the long term, other than, the top of the bull market, which we should also discuss is how are we going to are we going to take 100% cash position at the top of the bull market or the short-term tops, or are we just going to keep riding the wave?
Yeah, that's a good plan too. Like, how do we want to try and maybe time the top, and what do we want to do once we get there as well? So yeah, I think we should discuss that for sure.
Yeah, I know. I think I was talking to Jeremy about this at some point, but I think like set protocol, I think like they might have like a feature down the road where it's like you can take the individual components of like the fund and like put them in like different protocols. So maybe it's a way like so we can kind of like maybe not necessarily have to like take like 100% cash position. We can maybe just like put them into like compound or like yearn or something, kind of earn a yield on them to kind of like help kind of soften the blow of like the bear market if we don't necessarily want to like take everything off the table and then have to like kind of try to like reallocate it. And yeah.
So you're more talking maybe like in a stable coin and then just stake it or something?
Yeah, like something like that. Or like when we have ETH, like if we want to like if we don't want to sell our entire like ETH position, we can maybe like stake that or put that in like compound or um depending on like what the yields are. Like I feel like if it's like 0.1% yield, like probably want to just take it off the table. But like this way, if we don't want to go to like necessarily 100% cash, like it's kind of like some options. It gives us kind of like some options, I feel like.
This was just a quick question for Eric, but for certain coins like Polkadot or Kusama, are you able to stake them through token sets, or how does that work?
Yeah, so Polkadot, the dot token, I don't think is available on ETH. I think that because it's its own, it's for its own blockchain. But there are a lot of Polkadot ecosystem projects that have ERC20 token equivalents of their own project. So I don't know if Kusama is one of them. Kusama might be like a Polkadot exclusive one. So, that's something you guys might want to take a look at. Yeah, Sam agrees. Yeah, no dot, but yes to projects. So you guys can, go take a look at that. And if it is available, now you run into the same thing about the custodianship, because if there's an ERC20 equivalent, then you'd have to consider like whether the custodianship risk is something you want to take. Otherwise, this could be something for like a future rebalance, is like to open up a second smaller fund like on Polkadot with Polkadot specific projects, right? Like have that separate basket there. So you guys can look about the decision there. I also wanted to say that in terms of like the decision-making framework, since everyone's like at the same level, I think that a consensus-based framework is best. So like if you guys run into like a conflict, like, oh, should we have WBTC or not? You just do a majority vote. I feel like that would be the easiest way. And then later on, right, as you guys like move up, bring on new analysts, there can be senior analysts and junior analysts. The senior analysts, because they have that experience, can like have like a bigger say, right? And then kind of figure it out there. But like for right now, I think decision-making framework is just, if you guys agree on something, then great. If you don't agree, then it could just be like a majority vote.
Makes sense.
As far as the majority vote that you were talking about, would that also include members of the crypto fund committee? Because I know like a lot of people in the crypto fund committee chat are my peers from Rutgers, and quite honestly, they know nothing when it comes to finance. Would they also be included in the vote? I mean, I don't have a problem with that. Would it just
no, they won't. So we'll be removing everyone that didn't fill out an application, was not selected. So like this is a transition to the crypto fund. Like previously, it was just like who's interested, like come and join. But I think the evolution of the program is such that, okay, we have an application. If someone's interested, show your interest, show that you're committed to the level of the commitment that's required. Then you're in the crypto fund, and then you can be a part of it, right? Because you're actually putting in the work and you're doing the research. So as of right now, it's just you guys. And so we'll be removing everyone else. But then if people want to come back in, or if new people want to come and join, they would be the same process. So the application was switched to a rolling basis application. So you might have like new people joining and being a part of the crypto fund, but we're making sure that like everyone that joins is as committed as everyone else is, so that it's like fair to everyone.
sounds good?
So right now, if you wanted to vote on things, you could just vote between like you three, and then I'll talk to Jeremy and we'll like clean out the group, so that way you can do like the Telegram polls in the group and just make the voting that way.
Sounds great. All right, do we have anything more we wanted to discuss? And Ben, how much longer do you have till you got to go?
Yeah, I'm probably gonna run in like 5 minutes just because like I'm at a hotel with my family. We have to check out by like 11.
Yep.
Right now, I'm just looking at all of our allocations and again, doing some of the math about how we can integrate as many of the tokens that we said as possible, maybe taking some out. Lucas, if you want to share your methodology with me, I'll drop my my Gmail in the chat. If you could share it on Google Docs so I could take a look at it. Lucas, or sorry, Ben, you as well, if you could do that.
Yeah, we could create a Google Drive and just put them all in there, share the Google Drive, and then we could all see the methodologies together maybe.
Yeah, sounds good to me.
Yeah,
Okay,
ask
perfect.
Jeremy because he might have already made something like that. So just ask him real quick if there's already a folder, then he'll add you to that. And if not, you guys could create it.
Perfect. And I don't know if you missed this, Sam, but I was talking, did we want to focus on certain verticals of projects, or did we want to kind of have like a diversified fund like NFT assets, like DeFi, Ethereum based?
Quite honestly, that's up to all of us. I prefer to have a more diverse basket of tokens, but if we want to do something like index type, like only NFTs or only DeFi, kind of akin to the DPI, we could do that as well. Again, like I said, Bitcoin kind of doesn't correlate to any other cryptos as far as like having like a certain carved out space. And I definitely think including that is a good idea. DeFi, I think in this current bull market will return more, but it is risky. Same thing for the NFT space. I think I had Mana in my allocation. I have to double check. That's also something. But I was looking at all of our allocations and it seems that we like decentralized exchange tokens like Uni and Sushi a lot. My favorite one is Pancake Swap, but that's not available. So I think we can write down that we have Sushi and Uniswap in our basket for sure. Does that sound good to you, Ben and Lucas?
Yep.
Good.
Cool. Yeah, and like mentioned, I mean, take notes on which areas are interesting to start exploring in the future. Like for example, Polkadot was brought up. Do we want to have a Polkadot basket? Binance was brought up through the Pancake Swap. Do we want to have a Binance Smart Chain basket? And then the NFTs were brought up, right? NFTs are interesting because we could have NFT governance tokens and NFT tokens like Mana, but we can also, and this is something that GDA Capital like told us. So GDA Capital, Michael Gord, he's a Ben alum and was also one of the Ben leaders. He runs GDA Capital now, but they were really interested in working with us and helping us advise and mentor on an NFT portfolio. So like actual NFTs, like individual art pieces, like land from Decentraland, like Axes and CryptoKitties, right? Like how would we think about that? So that would be a very, very unique and weird and interesting fund. So like if there's enough interest from the analysts and you guys kind of decide that we want to go into that direction, and that's something we can bring them on to really help us with.
Yeah, I'd be really interested to see if we could get maybe some companies like that as kind of advisors to help us with their methodologies and kind of give us any advice they have about running a fund or about certain assets themselves.
For sure. Yeah, we've reached out to hedge funds to kind of bring them on board to this program. Some of them are a little slow in responding, but others have been like really great about it. So like we're going to be announcing some partnerships in the coming weeks, and then they'll be joining these meetings to like kind of help you guys walk through this whole process, and because they do this for like a living, and so
yeah,
and it'll be very similar to the experience you'll actually have if you go and work for them. It's one day. So yeah, so we'll be in touch about that.